If these things apply to you, then file your ITR immediately. Otherwise, an income tax notice will arrive. Just imagine. One day, you're sitting peacefully in your office, sipping tea while working on your laptop. And suddenly you receive an email on your phone, Income Tax Department, notice issued. Your hands start to tremble, sweat appears on your forehead, and only one question echoes in your mind. I didn't do anything wrong, so why did I get a notice? The answer is very simple. You didn't file your ITR, even though it was mandatory. Every year, crores of people in India file their income tax returns, ITR. But there's a large section that thinks, my income is below the exemption limit, so why do I need to file a return? But the truth is, under income tax law, there are certain cases where even if your income is below the tax slab, filing an ITR is mandatory. And if you miss it, you may not just face a fine, but also serious legal action. Today we'll discuss this topic in detail. But before that, if you're new to our channel, don't forget to subscribe so you receive every update from us first. So let's begin today's discussion without any delay. Let us tell you that the deadline for filing ITR is approaching. The Income Tax Department has made it clear that those who are required to file their ITR must do so by September 15, otherwise, the system will consider them defaulters. In this script, we will tell you about 8 such situations which you might relate to, and because of which filing ITR becomes mandatory for you, otherwise, penalty, notice, and loss of tax refund are certain. First situation. If you have spent 2 lakh or more in a year on a foreign trip, whether for yourself or someone else. Yes, going abroad is no longer just about a passport and visa. If you have spent more than 2 lakh on foreign travel, then regardless of whether your income falls under the taxable slab or not, filing an ITR is mandatory. This law exists so that the Income Tax Department can track whether your income and expenses align. And even if the expenditure was for someone else, like parents or children, ITR filing may still be required in your case. Second situation, if you own foreign assets, foreign shares, or receive income from abroad. Nowadays, many people invest in international company stocks through digital platforms like iDemoni, Grow, or Vested, such as Apple, Tesla, or Google. If you've done the same, then even if your taxable income in India is low, filing an ITR is still mandatory. This is due to Section 139 (1) of the Income Tax Act, which states that if you own any foreign asset, receive foreign dividends, or have signing authority on a foreign account, you are legally required to file an ITR. Even if these investments are made in your parents' names and their income is below the taxable limit, they too must file ITR. Third situation, if TDS, tax deducted at source, or TCS, tax collected at source, of 25,000 or more has been deducted under your name. Since April 2022, a new rule has come into effect. If 25,000 or more has been deducted or collected in your name as TDS TCS during the financial year, then filing an ITR becomes mandatory. This includes scenarios like earning interest from an FD, doing freelance work, or having any payment where TDS was deducted. In such cases, if you don't file your ITR, the tax department may question you. Why didn't you file? Fourth situation, if you are engaged in business or a profession and your turnover income crosses a certain threshold. That means if you're a business person with an annual turnover of 60 lakh or more, or a professional like a doctor, lawyer, or CA, earning more than 10 lakh in a year, then you must file an ITR. This rule was introduced to ensure that independent professionals and business owners declare their incomes transparently. Fifth situation, if you want to claim an income tax refund, often TDS gets deducted, but your total income remains below the exemption limit. In such cases, you're eligible for a refund. But to receive it, you must file an ITR. Without filing, no refund will be processed. The Income Tax Department first verifies the details submitted in the ITR before issuing any refund. So if you're thinking, I don't need to pay tax, so no need to file ITR, think again. Because without filing, you won't be able to reclaim your own money. Sixth situation, if you have paid 1 lakh or more in electricity bills in a year. Nowadays, with most people using air conditioners, microwaves, and high-power gadgets, monthly bills can easily reach 8,000 to 10,000. Over the year, this amount may exceed 1 lakh. In such cases, the Income Tax Department mandates that if your total annual electricity expenditure crosses 1 lakh, you must file your ITR, otherwise, you could receive a notice. Seventh situation, if you've deposited 50 lakh or more in a savings account or 1 crore or more in a current account. This rule mainly applies to those who receive a large lump sum amount from property deals, business transactions, sale of shares, or any other source. Even if the money is legitimate, the Income Tax Department requires full disclosure. If you've deposited such a large amount and haven't filed your ITR, the department has the authority to immediately investigate your financial records. Eighth and final situation. If you have claimed exemption on long-term capital gains, LTCG. For example, suppose you sold a property and reinvested the proceeds into another property or government bonds to claim LTCG tax exemption. Even if your exemption is valid, you are still required to file an ITR and provide detailed information about the exemption. Several sections of the Income Tax Act, like 𝐮1, 𝐮1F, 𝐮1EC, are related to this. If you fail to file your ITR, your exemption claim may be deemed invalid. Now just think, how many of these 8 conditions apply to you? Have you traveled abroad? Was TDS deducted from your FD? Did your electricity bill cross 1 lakh? Or did you deposit a large amount in your savings account? If yes, then filing your ITR is no longer just a formality, it's a legal obligation. People often think, my income is below the tax slab. Why should I file? But now it's not just your income. Your activities are also on the radar of the tax system. Whether you spent 2 lakh on foreign travel or had 25,000 in TDS deducted, you are required to file your return. Another important point, if you fail to file your ITR on time, you can be charged a late fine of up to 5,000. And even if your total income is below 5 lakh, a penalty of 1,000 still applies. Beyond that, your ITR record is crucial for future needs like taking a loan, applying for a visa, or building your credit score. Filing ITR is not just a tax-related formality, it's proof of your financial responsibility. It shows that you are an honest citizen of the country and a contributor to the system that is building India into a developed economy. So after watching this video, ask your friends, family, and colleagues, have you filed your ITR? And if the answer is no, explain these 8 points to them.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.